Welcome, everybody, colleagues, friends from different places, and this is our seminar before the break. So we are not going to have any seminar next week. We will start the week after. Meng, is that true?
Yes, correct.
Okay, great. So for this, let's say half term, we will stop with this topic today. So that's the topic about financialization. So we heard financialization actually, at least me, I heard financialization in the real economy, in industry sectors, but I have not heard anything in the housing, in the housing sector. So I'm very interested in understanding more, and particularly, I think the title says that you are going to combine the housing sector and the energy sector. I'm very curious to know what are the connections between those two sectors. So let's say, and this is another thing is of today's topic is on Turkey. So I think that's even more interesting because I just learned that the land ownership in the past actually was very often owned by the state, which is interesting as well in Turkey. But let's see how the topic is going now. I'm trying to find your little short bio. So we are going to have Dr. Ezgi Unsal. I hope I pronounced okay. So I think Ezgi, we met, on just one occasion. But welcome to our CGF Seminar series, and so you joined the SOAS. I understand only in the past year, but you have done your both undergraduate and PhD at SOAS. So you are very familiar with SOAS. And I think the research, as far as I can see, is very much in line with our research at SOAS, particularly in the economic department. And particularly, I think I'm very impressed by this book. So you already published a book in 2021. The title of the book is Constructing Change, then a Political Economy of Housing and Electricity Prevention in Turkey. So you see, you touched upon electricity, you touched upon the housing sector, and now today you are going to mention the energy sector in general as well. So a lot of questions. So I'm hoping that our audience will find this topic very interesting, and we will have a lot of constructive discussions. So when you're ready, Ezgi,
yes.
So the floor is yours. Thank you.
Okay, thank you. Thank you very much for inviting me. Can everybody see my slides on the screen?
Yes, I can. Yeah. We can see it. Yeah.
Okay, thank you. So the title, as you can see, is the housing financialization with delayed asset price inflation in Turkey. So I will just touch upon two main topics, which is state ownership of land and the contribution of the energy sector, because these just really shaped the housing sector as it is now. So this paper is actually based on, coming from like a bigger research, which produced my book. It was published in 2021. It was based on my PhD research completed at SOAS in 2018. But now basically I'm just like expanding it in this paper, expanding the research in this paper. So I will briefly talk about the book itself a little bit because it will also explain what this paper is about. So the book itself is like a very classical political economy type of research. Like there's this historical approach. It just explores how the practices of provision, like social provision, especially in housing and electricity, energy, evolved through time, especially since the 1980s. And then it also explores how these new practices that are in line with global trends, specifically with financialization. So in the beginning of the research, in the beginning of the PhD, which is just back in 2013, 14, my focus was very macroeconomic. So I was basically interested in financialization as a theoretical concept, and my purpose was to just explore it in the context of housing and energy in Turkey. So basically to use these as like case studies to just explore financialization as a theoretical concept. But as I went along, I became less interested about financialization. And then it was also because that was the time it was being oversaturated, right? So it was just right after the housing crisis, like the big financial crisis of 2009. So everybody was working in this area, and this area was becoming oversaturated, and like so many just good quality work just came out. And then I just like started questioning like the usefulness of the concept of financialization. I mean, do we need to use this concept to explain everything, or does it really explain everything? And then just it became more of a methodological exploration rather than an exploration of financialization in these case studies. So as a result, this paper and also the book basically is less about studying the Turkish housing sector as a case study of financialization, but rather the exploration of the concept of financialization itself and finding the missing features of that literature. So basically it engages with that literature and uses these case studies to just like point out like some missing like features of that literature. So it's in a way, it is like a critique of the financialization literature as a whole. So then, I mean, it means that I will just like take some things as given. So I won't explain everything. But if you're not familiar with that literature, feel free to just ask me at the end of the presentation, because I will just, like accept as given. So why energy and construction sectors? I mean, Bong was asking me initially, like, why did you choose these sectors? But there's a very simple answer, because these sectors in the 2000s and 2010s were growing very rapidly. So Turkey was experiencing like a big macroeconomic growth period, like a very, very optimistic growth period in that time. And then these sectors, although their share in the GDP is not like very big as expected, because construction sector is never really like larger than 6 to 7% of the GDP, considering the structure of the sector itself. But they were just growing a lot, right? So, for example, there is an example in 2019, and this is like 2019 is when this like optimistic macroeconomic growth path just reversed. So still the energy sector projects were receiving 42% of all project credits. So basically like the biggest sector to just receive all project credits, which is like the investment credits. And then like the share of infrastructure and real estate were just like following. So they were also receiving 30 to 10% respectively. So basically these were receiving all credits. And then when you just compare it to other traditionally strong sectors, like such as textile, you see a declining trend, like an opposite trend there. So it was just, its share was declining from 13% in 2000 to 4% in 2019. So there was a consensus at the time that these sectors were really the drivers of growth and accumulation for the Turkish economy in that period. And then basically, like I said, initial question for me was to investigate whether that path was sustainable or productive in the long term, because this was the main concern. So that some people were investigating, and because construction sector is very labor intensive, like high cyclicality and low returns, so some people were questioning whether this was very sustainable in the long term. And also, I mean, that's also why I just made the link to financialization literature, because in financialization literature, there is a heavy emphasis on the housing exchange in an economy, I mean, growing housing exchange in an economy to reflect some deeper speculative tendencies, which I'm going to explain in a bit. Okay, so the literature, what is this literature about? So basically, we can talk about two distinct branches. So one is like coming from the economics discipline itself, which is very macro. And then, I mean, these were all just produced in the aftermath of the financial crisis. So they really explore the mechanisms, the macro mechanisms through which the imbalances in the housing market could reflect deeper macroeconomic fragility. So basically, this literature assumes when we see an exaggerated like housing exchange in the asset market, in the assets market, not only housing as a commodity, but also assets related to housing, such as like mortgage securities and other securities. When we see an overemphasis on the exchange of these assets, these sometimes just reflect some deeper macro fragilities, basically like some speculative, when there is no real growth, speculative activities grow, right? So these sectors, they just gain more importance in that period because it was assumed, so they just reflected some like systemic imbalances in the economy. And then there is another branch in the financialization literature. So this is not necessarily coming from economics discipline, but it's more interdisciplinary. And these people, what they do, they focus on housing as a commodity, and they explore the commodification of housing, like how it's increasingly bought and sold through the market, and the withdrawal of the state as an actor. So basically just, like the decrease of social housing, and then increasing buying and selling of housing as a commodity, which just gives rise to speculative activities as a result. So these two distinct branches, like sometimes they don't necessarily communicate with one another. And then when I was looking at the Turkish case, neither path, like neither of these literatures were capturing what was really going on in that sector. So basically, first of all, if we just consider the macroeconomic literature, which is where I'm coming from, right? I'm coming from the economics discipline. The housing asset markets were not big enough to create macro imbalances, right? I will explain this more later, but now just as a fact. So the housing asset markets were not big enough to create this macro level impacts. So I couldn't really talk about these macro mechanisms. And then when I was looking at the commodification like story, it wasn't really taking place through the withdrawal of the state in the Turkish case. It was the opposite. So the state was becoming a kind of more important actor. It was actually the primary actor in creating functioning housing markets, both through direct housing supply, but also other projects such as large-scale regenerations projects and securitization of assets as well. So it was acting as an agent for balancing supply and demand. So it wasn't necessarily taking place through the withdrawal of the state. And then when I just put everything together, I just found out, so these developments could be explained by the dynamics of the housing building industry itself without necessarily just resorting to financialization literature. And then these dynamics of the housing building industry, as a productive industry, they weren't really addressed at all by neither of the financialization literatures, right? Because this is because financialization literature has a more macro focus. Even the interdisciplinary kind of human geography branch, they don't have a macro focus, but they focus on housing as a commodity, and they don't really discuss the economic property, the characteristics of the house building industry. So this research just bridges the gap, basically, by just introducing these dynamics into the picture. There are other questions such as what is unique about housing, or does it have to be unique, and all these other questions, but I will not go into that in that presentation because of time constraints. Like I said, housing was considered to be non-productive. Why was that the case? Because of its tendency to create short-term speculative motives, right? So when we observe the growth of the housing sector, then we sometimes also observe short-termism on a kind of a broader macroeconomic level. So these really go hand in hand, short-termism and growth of the housing asset markets, housing sector as a whole. So, I mean, there is a unique feature, there is a unique aspect of the housing in that sense, because mortgage markets are very unique in the sense that they enable securitization very easily, right? It's kind of like all these like assets that were created prior to the crisis, the global crisis. So the mortgage markets are very conducive to this securitization process. But like I said, in the Turkish case, these markets weren't really big. So the mortgage law was passed in 2007, so it's very new. So Turkey didn't even have any mortgages, like housing loans. I mean, there were some housing loans, but there weren't any economy-wide like policies to provide housing loans. So basically, they were obtained through like private channels. So it passed only in 2007. So at that time, like the value of mortgage loans didn't even reach 1%. And even as late as 2017, the loans didn't exceed 7% of GDP. So this is like almost like a joke compared to countries like the US and the UK, you know, like the share of housing loans is like 80 to 90%, sometimes even bigger than the GDP itself at some years, right? So it's like very negligible. So you can't really talk about any macro impacts within a sector which doesn't really exceed like 7% of the GDP, right? It can't produce these kind of like macro repercussions. And second, the housing market in Turkey was not really characterized by speculative buying and selling of housing and also securitization, but rather it was a typical, very traditional housing markets in which the increasing demand was matched by an increasing supply, right? So as long as you have, the thing is like, in order to have a speculative formation, I'm sorry, in order to have a speculative formation, so there needs to be a mismatch between supply and demand. I mean, especially in the context of housing, which was usually the case. But in the Turkish case, whenever there was an increase in demand, housing supply was also increased. So we didn't see this to be reflected on prices, right? I mean, as long as supply is just matching the increase in demand, then the kind of price increases are not very sharp. So we couldn't really observe an inflation in asset prices. I will explain why this was the case, because it was mostly due to the availability of land, given the specific nature of the land markets in Turkey. And then the third factor was that joint investments between housing, construction as a whole, or housing and energy. So basically, the firms which were operating in housing were also operating in the energy sector in Turkey. And then you can't really observe any short-termism in the balance sheet of these firms, because they were also having some very long-term, high barriers to entry, kind of like high risk and high return kind of, that kind of structure, like very capital intensive. So they were having long-term energy investments. So you couldn't really observe any short-termism in the balance sheets of firms which are operating in that sector. Right? So does that mean the disruptive asset price inflation just didn't exist in Turkey? Yes, it didn't in the classical sense, but there was something happening clearly, right? So these sectors were just gaining importance and they were becoming the drivers of growth and so on. And then we didn't really observe any disruptive asset price inflation. And then as long as, when you consider financialization, as long as you don't observe an asset price inflation, it doesn't really, how can I say, it's really equated with asset price inflation. So as long as you don't observe that, you can't talk about all the possible repercussions of financialization, right? So there is this equation between the two. And then some people they were just observing the same story in other developing countries, and they came up with another definition of financialization, like another branch of financialization. So they claimed, okay, so maybe in some of these developing countries, we don't observe financialization as we observe it in developed world, but we just observe a subordinate version of it, which means the financial dependency of these economies on the core meant that they were really importing all these macroeconomic fragilities from the core, And then it was through this kind of imported fragilities, they were experiencing the impacts of financialization, right? So I don't particularly like that literature because it's like, then everything becomes financialization, right? So if you define something as financialization, which is like the asset price inflation, and then when you don't see it in the context of some cases, then you just invent another version of it, then it becomes, like it just negates itself. So everything becomes financialization in a way. And obviously we can talk about subordination in the case of developing economies. But in that case, why do we need to use the term financialization at all, right? Kind of like if it's like an umbrella term to just explain the whole world. Anyway, so basically, instead I offer a structural approach to housing, right? So we need to just study the dynamics of the housing sector itself, right? We need to look at the macro dynamics of the housing industry. It has some productive characteristics, right? So it has some like structural features, and these features are not really discussed in the literature at all. So first of all, we need to just observe what goes into the housing industry, and then we need to just observe all these components individually. So within the housing industry, we can talk about two different industries within the sector, two different industries with very different risk and return structures. So house building and land development. And these two have entirely different productive characteristics, but because they have entirely different productive characteristics, their combination just provides the housing a unique structure as it has today. Anyway, I'm going to explain this more. So the house building is like the construction of new buildings, basically. So it's low-scale economies. It's very labor-intensive. It takes a long term. It's not very productive because it's very easy entry and exit. So you don't need a lot of high initial investments to just make investments in the house building industry, right? So it just like takes very little. You just only need the labor costs, basically. So it's very highly labor intensive. It's very cyclical because it also, like stops at times of like depth of winter, and sometimes, like the bust of the sector is highly cyclical. And like I said, I already said it, easy entry and exit conditions. And when we look at land development, it's the opposite. So this is like a very high scale economy, is highly capital intensive because you need a lot of initial investment to just enter into the industry. So as a result, the barriers to entry is high. So as a result, the returns are also high. So you end up with two different structures. So one is low returns, labor intensive, low scale house building, and the other is high returns, high risk, high scale economies, capital intensive land development industry. So this part of the research, it draws upon like Michael Ball's structural approach to housing studies. So he actually just identified these two sectors, these two industries within the sector. And then he also claims such like cyclicality with like great volatility in output and prices, it's not unique to housing. So it is very typical in other like consumer durable or investment goods, such as the automobile industry. You have this kind of structure when the existing stock of a good is greater than the current output. So basically, when new output cannot really keep up with the increasing demand, we observe, as it is in the automobile industry, we observe like sharp price increases during these like boom periods, right? Because like the demand is increasing and the supply is like taking time. So it's a very slow process. So cannot really keep up with the increasing demand. So you observe like high price spikes at times of like boom. But in other sectors such as automobiles, so these also tend to be highly capital intensive, meaning that there are barriers to entry. So the firms that are operating in these highly capital intensive sectors, they can enjoy some form of monopoly power to just, like cut their prices down, or kind of like to just respond to these like supply shocks, right? So they can have some markups on their prices to just, compensate for this volatility in output. So this is not necessarily the case in house building, because in house building, you have both a slow kind of like stock adjustment process. slow production process, but not high barriers to entry, so easy entry and exit. So the firms cannot really enjoy some monopoly power or some like markups on their prices to just compensate for their losses during the busts, right? Yeah, I mean, this I already explained, the division between house building and then development. So I'm not going to just go over this again. But as a result, because these two sectors are structurally very different from one another, I mean, in any economy in general, you just observe a diverging of these industries from one another. What does that mean? So you have different actors. So different actors and different firms engage in land development and house building. So they're not necessarily the same firms, right? But the thing is, because house building has this like very unique characteristics, it cannot really respond to demand shocks very well. So the firms which really combine these two can just enjoy some monopoly power and can just adapt, can just respond to demand shocks better compared to the firms which do not have any investments in land development. So I will explain this a bit more. So basically, because house building is highly competitive and low entry, easy entry and exit conditions. So if firms acquire their own land banks, so basically if they also have some investments in land development, which is more capital intensive, right? So what can they do at times when demand is like very volatile, at times of like boom and bust? So what can they do? They can hold on to their like own land banks instead of just like cutting the prices to just respond. They can just wait until the bust period is over, so they can just readjust when the bust is over, basically, right? So they can enjoy some monopoly power if they also have their own like land banks at their hands. So basically to just like give them some kind of like a monopolistic power to just respond to these price changes in the market. So Ball actually investigated this in the context of British housing markets, and then he found out that the housing markets, like starting from following a bust in the market in 1973, starting from the period, ownership has started to be centralized in the hands of a few large house builders with access to their own land banks, so they could just respond to all these like shocks with some like certain degree of monopoly power instead of just cutting prices all the time, right? And this is basically what you end up with. So when you have a very volatile industry, you have all these like rapid price spikes. What happens? Demand increase, so the prices increase, but there is like a following bust, so the prices are cut. So then you end up with a kind of like more, let's say, like a stable price structure. But when you have a monopolistic structure, so the demand increase, so the prices increase, but then house builders, instead of cutting the prices, they just like hold on to their land bank. So they just wait until the bust is over, right? So they don't cut the prices down. So the prices stay at the same level or go even like further. So you end up with a kind of like continuously increasing price structure. So this is actually what was going on in Britain. I mean, as Ball investigated, right? And then you end up, because they're not producing new output, but they're just waiting until the bust period is over. So you end up with a speculative market structure characterized by chronic supply shortages. Right? So basically in the UK, supply shortages have became the norm even before the financial crisis, right? So this is not a new thing. I mean, after the financial crisis, it was just discussed. I mean, it was just observed by many. There were a supply shortage. But this has been the case actually since the 1970s. So this has become a structural feature of the UK housing market because of this monopoly power that some landowners, house builders had actually in the market. And then you can see, in the early 2000s, new buildings actually, they only average around 15% a year in the total owner occupied house sales, right? So only 15% of house sales were just actually new buildings. So then Robertson, she claims that this strategy of combining the land development and house building industries, it is instrumental in explaining how in many cases of volatile asset price increases are mostly the result of chronic supply shortages in the UK. But obviously this is the UK. But when we look at the Turkish case, I gave the UK as an example to just, compare and contrast the two cases. So the same kind of speculative demand increases, we were also observing it in the 2000s, but then we weren't necessarily observing the same price spikes in the prices, right? There were some increases, but it wasn't really comparable to the UK case. So this was due to two things, like I said. The first is the state ownership in the land markets, and second is the interlinkages with the energy sector. So here, some descriptive statistics you can see. So in 2005, Turkey actually had the highest real credit growth in housing. So this is all countries, throughout in globe, across the globe. So it had the highest credit growth in housing. And then if you look at the price to rent ratio in 2005 again, so it had the highest price increase in 2015, but still it wasn't really translating itself into a fully grown bubble asset price inflation case, right? So like I said, that this was also the period of optimistic macroeconomic growth since the early 2000s. So this picture has actually changed after 2018. So after 2018, the economy, the macroeconomy has started to experience some real exchange problems. So the growth of the housing sector also didn't continue as it was before, but still, like I said, even as late as 2021, Turkey had the highest rate of annual percent change increase in real house prices, right? Even after the recessionary macroeconomic period. So even after that, even after the growth pattern has reversed, housing prices continued to increase, but we didn't really observe bubble-like features in the form of overvaluation. So now let's just look at these two characteristics. So the first, like I said, is the state ownership. So historically, now today, state only just owns 16 to 17% of all land available, which is, not all land basically, but still it is the single biggest actor. And historically, which means during the Ottoman times, the Republic was founded 100 years ago. So during the Ottoman times, land has been owned publicly. It was really possible. Private ownership was possible, but de facto, not really possible. So basically, they just leased it for the long term. And then it was, even if they sold it to private actors, it could easily be confiscated by the state, which happened regularly. So land as a commodity was a public commodity at the Ottoman times. So as a result, you end up in an economy where agricultural land distribution has not been very unequal compared to Latin American cases, for example, right? So which shaped agriculture development, right? So you don't have this kind of large landowners at some place and landless peasant at another place. So it's very equal compared to other country cases. So the agricultural development has been more or less unified. And then there was another result. So the TEKGÜÇ found it. So due to such relatively equal division of land, it also functioned as a surrogate social policy. So as a result, the home ownership rate in Turkey has also been structurally very high, historically very high. In 2000s, home ownership rates were almost 65%, which is very, very high. Again, due to these land practices. So then what we end up with, when you have the state as this an actor which has the biggest influence on the market, so it just started to act as an actor to balance all these, to just respond to these like rapid supply and demand shocks, right? Because it has its own land bank. I mean, it has, like 16% of all land available. And also in early 2000s, they also just passed some set of legislation to give a state institution some unique powers. So it's called TOKI, Mass Housing Administration. So basically it owns all public land. It has like special, like extensive duties in land zoning, planning, but also it has some building responsibilities as well, right? So this institution, it actually just directly engage with supply and demand to just, like smooth all these like rapid price spikes in the sector. So what did it do? It had 4 functions. So first, it provided direct housing supply through its social housing projects. I mean, this is basically what, like social housing is. So provide some provide housing for low-income groups, but then cross-subsidize it with luxury housing projects on the side, right? So it was doing that. So related to its first function, related to its like social housing function, so it also provided land development to new areas. So basically to open it for new actors, so new private actors. So when TOKI was just building a new social housing project, so it deliberately picked a neighborhood which was completely devoid of like any utilities or any roads or any other public services, so that it could also bring some land development there, so other private institutions could join in as well. So just it opened up some land. So it also undertook some large-scale urban regeneration projects. I mean, such as the Tarlabaşı projects. I mean, it's just an example. It's like one of the biggest. But then it had like many urban regeneration projects, which basically, again, kind of, directly engaging with demand. And then it also provided some examples of mortgage securitization, the first examples of mortgage securitization under its real estate investment trusts, right? So it was basically just functioning. So the first 2 things, so it was just, providing new supply. It was also, like playing with the demand. So it had some influence on demand. So it could just increase or decrease it. And then it also just provided some securitization, even like direct financialization, right? So it, like I said, it functioned as an institution to just balance supply and demand. So as a result, because you have all this like land which is available through the public, so you don't end up with this kind of same monopolistic structure in the UK where you have chronic supply shortages. On the contrary, whenever demand was increasing in Turkish housing markets, the state could step in, this institution could step in, provide some new supply, or just kind of like, offer a new regeneration project or offer a new financial asset or whatever to just, smooth all these like boom and bust cycles, right? So we never really observed any supply shortages. And then the second thing, like I said, is the interlinkages with the energy sector, which tends to be long-term in contrast to the house building, which is short-term, right? So this is, many people who just produce work on the housing industry in Turkey. So, they always just, there is this consensus, there is this argument that this is short-termist, really, because the literature suggests it's short-termist. But when you actually go into the balance sheets of the firms, you don't necessarily see an increase in short-termism at all. On the contrary, there is like a slight increase towards, slight turn towards more long-term investments, long-term liabilities. So this wasn't really the case. So first of all, this is just an example of the firms which are operating in the electricity distribution industry. So basically, this is the result of energy distribution privatization, which was completed in 2013. And then you can see all the firms which won the tenders, right? So they had the right to just distribute energy. And then when you look at these individual firms, every single one of them also has investments in house building. So they operate jointly in these sectors in Turkey. I mean, this is just one example, but there are too many. I mean, any firm which has investments in house building, I mean, mostly in energy, then you can also have links. You can just link them to house building industry as well, and vice versa, right? So as a result, what happens when you look at their balance sheets, you don't know where these assets and liabilities are coming from. Are they coming from their energy investments? Are they coming from their house building investments? We don't necessarily know. But what we observe, because energy is like very long term, to engage in the energy sector, you need to have some initial very long term investments. And so when you look at the balance sheets, you just see, I mean, you see a similar scenario, right? So I just look at these are the company account statistics. So the central bank is providing these statistics, so it's very easy to access them. So I looked at the balance sheets, and then when I just looked at the construction sector firms' liability structure, like I said, so this like light gray line, I mean, the lightest gray line, as you can see, which is the long-term liabilities, you can see instead of decreasing, it's even increased starting from 2010, right? I mean, it's a slight increase, but considering how short-term this industry is, I mean, this is like still, striking. So we don't really observe a move towards short-termism. And then you can see the short-term liabilities, which is this like dark gray line. I mean, you can now see like how short-term that construction sector actually is, right? So almost 60% of all liabilities. Like, I mean, I just like picked liabilities here, but the asset structure is also the same. But liabilities are prioritized because it's just like new debt, right? So kind of like the new investment is just like financed through this. And then you can see like 60% of all liabilities are short-term, showing the structure of the sector. But I mean, we don't see any increase in it. So we don't see a kind of like tendency to become even more short term. And when you look at the energy sector firms' liability structure, you can see a striking increase in long-term liabilities, right? Because like this is all new investments that are being made in energy. Obviously, it's just financed through long-term bank credits, right? So this light gray line is showing the increase in long-term liabilities. So, I mean, I'm just like trying to say we didn't necessarily observe short-termism in either of these sectors. I mean, we weren't necessarily expecting it in energy sectors' balance sheets, but even when we look at the house building industries, we didn't necessarily observe short-termism to indicate financialization, right? So, I mean, as a result, what do I say? I mean, what do these findings really show us? Instead of just claiming, I mean, does that mean financialization is not really observed in the Turkish case? Instead of just asking this like yes and no questions, what about incorporating all these like structural elements of housing, which really explain why this was the case, without necessarily refuting the arguments of financialization literature, because it's just like a very macro level theory, right? It's a kind of like it's really preoccupied with macro questions. I mean, financialization literature. So when you just apply it directly to like a sectoral level, to sectoral level developments, this like macro picture is not necessarily observed, right? So this kind of, instead of direct like exploration of it within kind of like sectoral level developments, we can just incorporate some structural elements of the sectors that we are already investigating without necessarily resorting to these like macro level concepts. So this is like a conflation of like levels of abstraction, basically. So this is like my suggestion. So instead of just refuting the financialization argument or just expanding it, like by just like inventing like new concepts like subordinate financialization or whatever, we can just say housing sector itself, I mean, the dynamics, the productive characteristics of housing sector itself can explain some of these developments in the Turkish case, but obviously these sectors are changing, which are in line what the financialization literature suggests on a macro level. Right. I mean, I'm not going to just repeat this, like the findings ABC, because I think I already did. But yeah, so this will be my final comments. So thank you for listening. If you have any questions now, I'm happy to hear them.
Okay, so Ezgi, thank you very much for your very clear argument and the coverage as well. You covered quite a lot of issues. I'm sure my colleagues there, our colleagues there, they are thinking about their questions. And I will leave them for a couple of minutes, but let me kick it off for the questions. Let me start. Sandra, yes, I saw your hand. Let me start with your last points before you summarize. So you showed us some short-term liabilities versus long-term liabilities between two different subsectors, housing and electricity or energy in general. Mm-hmm. So you argue that actually, if it is in line with the financialization argument, we should have seen a lot of short-term liability. In your terminology, short-termism. But we did not see that for Turkey, for the housing, particularly housing building sector. And so based on this, you argue that maybe there are something else. So, and that's why you were motivated to talk about, to develop this research. So my first issue is, can you draw that conclusion only based on the observation of their structure of their liability? I have two issues here. One, those firms, particularly firms, as you said, in Turkey, they do both. Particularly, they are very big firms, so they have their energy businesses, or they invest in energy sector, electricity, but at the same time, they invest in the housing sector as well. In finance, so you first of all, because they are doing mixture things, it is very difficult to observe which part belongs to the housing investment, which part belongs to others. And because of this, it is very difficult for us to really say whether too difficult to identify whether this is whether they behave, in a short-term way or they have a long-term horizon. The reason I added the second issue for me is that I think in finance there is a maturity transformation between different debts, liabilities. Mm-hmm. So it could be that the same firm that they borrow short term on something, and then they transform. They can do a lot. So they put them together, and then they can use those money for long term, and they continuously borrow short term to support long term. So my first concern is on this issue, whether or not you can draw the conclusion only by looking at, short-term liability versus long-term liability. And I put forward my two arguments. One is they are the same firm, so you cannot really see. And secondly, in finance, there is a maturity transformation issue here.
Yeah, exactly. I mean, thank you, first of all, like a very good question. But I mean, I just show one example here, right? So in the book, you have all the breakdown of all liabilities, all assets, and all kind of like debts, like loans that's coming in and out. So I look at the maturities of all the loans they were taking, maturities of all their like liabilities and assets as well. And then the breakdown of all liabilities like as well. Like I just explore everything. And then like in none of them I could observe like a move towards short-termism. And your first argument that because these firms are the same is actually the argument that I make. So I just say because these firms were linked with energy, so maybe in their house building industries, I mean, in their house building activities, they were moving towards short-termism, but we really couldn't really observe on their balance sheets because of these joint investments with the long-term energy sector. So it's actually just, like protected them from the kind of like disruptive impacts of short-termism. But because we just really associate short-termism and financialization and asset price inflation to one another, right? Then in that case, if you don't really see short-termism, then you cannot really talk about financialization, right? So I'm just suggesting these are like very reductive approaches. So instead of just like looking for short-termism in the balance sheets, we can just talk about the transformation that is being take place, which is just this increasing growth of the construction industry, and then this kind of like speculative like activities that is going on, but without necessarily the impacts of that being observed on an empirical level. So we can talk about the transformation without necessarily just equating the impacts of the transformation with the transformation itself. So that was like my primary argument in the book. I mean, in the paper, obviously, I cannot just, like provide all support, but then I just like show some examples to just make that point, basically.
Exactly. So that thank you very much. But then I can go a little bit deeper. So yes, I know you argue that, because we cannot observe short term from, for Turkey, at least for Turkey in this sector. So we cannot really say there is a financialization. But because we cannot observe, there may be financialization, but we cannot really exclude the financialization as well, to me. So then I'm thinking the whole sector, actually globally, if you think about the financial crisis, if you think about the Chinese real estate market, if you think about the UK property market, as you used as a case, to illustrate the financialization, I mean. So to me, the problem is on the demand side, because you talked a lot about financial assets, price inflation, and you mentioned something, the shortage of supply. Yes, there is a shortage of supply, but I think the bubbles were created mainly from the demand side, because the demand contains a lot of let's say financial assets, financial investment, rather than for housing purpose. So I think from the global perspective, I do see it is the demand side that plays a very, very important role. So according to your argument and your book, which is interesting, and you argue that, in fact, there are some other factors. I agree, there are some other factors, but you if you draw a conclusion, do you need to put all those major factors together and to make the argument, rather than to just pick up one other factor? So that's my understanding of this sector. And I think the bubbles were really created mainly from the demand side, because the need for financial investment. And that's where the financialization issue or argument comes into the picture. So that's my second thing, and the third thing that I think I'm thinking about the state ownership as well. So and I think that element probably can you can support your argument more based on these special characteristics of the Turkish housing sector, or let's say the land ownership by the state. But if you do you want to respond, or do you want to pick up more?
Yeah, I mean, the thing is, I agree with you. It's at no point did I say financialization doesn't exist. I do think it exists, but it's a crucially macro level phenomenon taking place on a kind of like a very it's like a ground level mechanism. I don't like its investigation within kind of like sectoral or like individual level, kind of this level of like research, like finding it and kind of like associating it with certain results and then claiming, oh look, financialization exists here, financialization doesn't exist here. That kind of like, to me it feels a bit like, I mean, this is the kind of like, this is what I was arguing against. So I wasn't arguing against financialization as a theoretical concept at all. I do believe it exists. But then because we were kind of like, the way we do research, kind of like we pick a theoretical research, which is highly abstract, highly macro, and then we try to just apply it on a kind of like a concrete, like case study. And then there is this conflation of all these like levels of abstraction. These don't really operate on the same level of abstraction. I mean, there are like more things going on that on the concrete level, on the case level, and then we leave all these individual elements out just because we're just so preoccupied to find this like macro level like impacts that are in our head in our case, like we're just like trying to look for like certain results which might be associated with that macro level phenomenon. So this is like what I've had like problems with. Then I totally 100% agree. Financialization does exist. I mean, it is a thing. Yeah, but like maybe not necessarily that we should just apply it to each individual case.
I got your message. So I think I've seen a hand up for some times already. So Sandrine.
Yes.
Sandrine, can you come in, please? Yeah.
Yes. Thank you, Hong. Thank you, Ezgi. I have a question to better understand your presentation. You talk about the supply shortages, and you say that in Turkey during the 2000 it didn't appear because there was the intervention of the state through the Turkey regulation, I think, or something like that. And when the demand shock appeared, there was not a supply shortages. So I don't understand very well, because I know that the housing market is characterized by some constraints, which are, and among those constraints there are of course regulatory constraints. So if the government intervene through regulation and other stuff related to, I mean, if they intervene, it means that if there is a shock, a demand shock, it will take some time for the company to supply for new apartments. So I don't know how the supply shortages didn't appear. And if the explanation is that there was a provision of, there was a stock of apartments, it means that in this period, I'm wondering why during the pre-period where there were a stock of apartments, why we couldn't observe a decrease of price in the housing market. I don't know if I make myself properly understood, but I don't really understand this. I didn't really understand this part. So could you explain it? to me. Thank you.
Okay, thank you. Yeah, I think I understood your question. So the supply shortages, they don't really take place because supplying of housing takes like a long time. So, I mean, this kind of like long supply process, it only means the prices can increase and decrease like sharply, right? It doesn't necessarily mean that because it takes time, there is going to be supply shortages. Supply shortages only happen when there are certain actors which really, instead of just supplying new houses, they wait until the bust time is over. So they don't necessarily just supply new houses, because the prices are low. So they wait until the prices are a bit higher. So then you end up with supply shortages. So necessarily, I mean, in order to have supply shortages, you need to have some actors with some monopoly power. And this monopoly power only exists within the context of land markets. So in the Turkish case, we didn't necessarily see any supply shortages because anytime, like there was maybe like a bust period, and then the state couldn't interfere because it had all the land banks, right? It could provide new supply. And the thing is, even if it didn't provide any new supply, because it's the biggest actor, so it is the actor which actually decides, like what prices like land plots are, right? Because I mean, it can just cut prices down. So let's assume there is like an actor, like a person who owns like a piece of land, right? And he's just kind of like trying to just like push the prices up. But because the state has just so much land in its like land bank, it can just cut the prices to just combat these monopolistic tendencies. So I'm just talking about the kind of like a structural thing. But I mean, like I said, the shortages, I mean, this is not just correlated to just, like supply process just being a long process. It just only happens when there is like a monopolistic structure, like economically, when there is a monopolistic structure, meaning like people with certain kind of market power to just hold prices during times of bust instead of cutting them down. So because we didn't have this in Turkey, so we never observed any shortage, basically. Did I explain it or?
Yes, okay, thank you.
Thank you very much, Sandrine, for your question. And I heard the response from Ezgi. So now let's see whether we have some more questions from other colleagues. Jeffrey, sorry, I didn't see your name. Sorry, I didn't see your hand in the first instance. So please go ahead.
Okay. Thank you, Hong, and thank you, Ezgi, for your presentation. And it's very interesting. I have one comment. I don't know if maybe question, because my understanding is that you try to use the firm level data or information to make macro argument, if that's possible. But
I don't.
Oh, okay. Okay. So, but my if that is not right, but my comment is that if you have the number of firms that you have presented or used, you have questions relating to the number of firms, then the size of the firms, the sample or the ownership, because using liabilities, these are accounting information. These are accounting data or accounting variables that are highly subjective. And these figures will be affected by the size of the firm, the ownership, whether it's state-owned or privately owned. Then if you have bigger firms that are listed, the accounting requirements are different. Then the different accounting standards are applied because balance sheets are purely, and we have technology these days where assets and liabilities are defined differently. You have this. So if this applies, the argument that using liability or an asset basically on this without the detailed information about the the firm's background is sort of interesting to me, because the only way you can make this to sort of make people understand the background of these firms, to know why these, you can make this argument based on liability, where you have different application in terms of accounting requirements. Thank you.
Yeah, I mean, I have all the information in the book about the sizes of the firms. Yeah, so this information is also there, like which sizes. I only use, I deconstructed according to small size firms, or like all firms, like how many numbers of firms are in there in company account statistics. And like I said, I don't use only liabilities. I mean, because like this is a short presentation, I just picked that one as an example. But like I said, I mean, I looked at assets, I looked at liabilities, I looked at maturity structures, I looked at like new loans just coming in. So I looked at multiple things, and also kind of like a decomposition of all liabilities and assets as well. So I looked at that too. I just used that one slide as an example, because like liabilities is the easiest to kind of like convey the message. And I didn't want to, I mean, I'm not doing an accounting job, right? So I didn't want to just show you like one after the other, or these are the assets, these are the short-term liabilities, these are the long-term liabilities, and so on and so forth. I just use this as an example, basically. Yeah, and I'm definitely not like making a macro argument by using firm level data. On the contrary, I'm just saying that we shouldn't be doing that. So that's why I was trying to just engage with the financialization literature. So yeah.
Yeah, so Ezgi, you also actually mentioned that, so you started from that sector, the land, you distinguished between the house building subsector versus land development. And you actually emphasized on that the house building requires a lot of labor intensive, but in the land development, it is more capital intensive.
Yes.
Maybe I do not really know that much about the sectors, but why do you not need technology in house building? For example, in terms of the equipment, in terms of materials, construction materials, and so you only mentioned the labor. And also for the land development, what kind of technology did you mean when you say it is it's capital intensive?
Yeah, I mean, basically, I mean, these are like sectoral level. I mean, I don't decide if they are like labor intensive or capital intensive. So we assume for land development, you need amenities, you need infrastructure, right? So this kind of infrastructural investments, they require, I mean, in order to have like houses on a piece of land, you need to have like working like water pipes, electricity, and all these like amenities, and they require, I mean, this just all falls into land development.
Mm-hmm.
And also, like the zoning of the land, and if it's like, I mean, if it's on a hill, you need some kind of like some movement of like soil itself. So these all required like capital heavy investments. And then construction is like historically, I mean, traditionally, it's always been assumed you don't need a lot of like high technology, high capital intensive investments initially, because you just need like the manpower and some like concrete, and then some kind of like structure to build a house, and nothing else really. I mean, there is some technology, yes, but there is some technology in all sectors. So we don't necessarily assume it's it's like traditionally assumed like a very labor intensive industry. And also like when you look at the expenditures, like they decide, I mean, they kind of like look at like the sectoral level expenditures, like the majority of expenditure, if it's going towards like labor costs, then we assume it's like labor intensive. If it's going towards like technological investments and like machines, then we assume it's like capital intensive. And then for house building, that's the majority of all the costs, like expenditure is going towards labor costs, basically.
It is very interesting that in Turkey, those two subsectors are actually owned or are occupied by different firms. So I'm thinking, thinking about China, for example, a land developer or let's say real estate developer will take care of both the housing construction and also the land development. So I do not know why. So why in Turkey and they are clearly separated from each other.
No, they're not separate in Turkey either. They're mostly the
Okay.
same.
Okay.
I was just saying in general. So this was based on like Michael Ball's approach. So basically, he was claiming, in general, there is a division between those two industries within the sector. It doesn't necessarily mean some big firms. Obviously, you'll have some big firms operating in both. But then when you look at house building, you will find many small like firms which are only operating in house building and nothing else. So they don't have the necessary technical capabilities to engage in land development. So that's why there is this like structural division. So it will just that the picture would look very different. So for example, like I said, I mean, in the book, I also look at like what are big firms doing, like small firms doing, like small and medium size. So the structures are very different. So when you look at big firms, they're both investing in land development and house building, but then the small firms would only have investments in house building and they wouldn't necessarily have investments in land development. So this is like the divergence. And it's not necessarily unique to Turkey. I mean, it's just like a structural divergence, like a theoretical one.
Yeah, I understand a lot of subcontracting in this subsector. So, Karen, I hope you are ready.
Can you now hear me?
Oh yes, now we can.
Well done.
Okay,
Yeah.
good.
Yeah.
I have to rejoin.
Please, yeah.
So if you mentioned, and if I missed it, yeah, sorry for that. First is the role of public land in, I mean, driving or attracting these firms into these two sectors. I couldn't, I mean, there is some, I mean, if you like mention, and if I missed it, sorry. So just for clarification, second, as a state, can I stabilize these markets if I provide, I mean, this is one instrument I have. So there are lots of policy instruments. So I have this public land, this treasury, even it doesn't know sometimes, I mean, whether it owns the land or not. So even the records are also patchy. That some are not even registered. So the state doesn't know, I mean, how much land it actually, I mean, like really owns. Put that aside. So I have this pot. I can mobilize it. Can I just stabilize the markets if I do not endogenize the credit markets here?
I didn't get your first question, but I can answer your second. Well, the state is not deliberately making any policies to stabilize the market, right? I mean, I'm not saying it's like a deliberate act, but by its very existence in it, it just pulls the prices down. So because it has lots of land, it doesn't need to know which land it owns or kind of like it doesn't necessarily need to work properly. The fact that it has a lot of land just puts the prices down. It really makes a difference whether land is publicly available or land is just like privately owned, like in the UK or like Latin America, and kind of like unequally distributed and so on. So it has like some distributional like impacts, of course, but it also has some like price impacts, like direct price impacts. Like the fact that the state has a lot of land is the reason why land prices in Turkey are very low compared to all these like all developed like countries. It's much lower. Yeah, so there's like a kind of like, this is not an empirical observation, but this is rather like just putting it out as a theoretical kind of like fact. The existence of state within the land markets, it acts as a stabilizer for the sector, not because state is kind of like acting deliberately and just like, you know, like making some like clever policies or whatever. It doesn't necessarily have to do any policy, but because it owns land and it is there as an agent, it just puts the prices down. It just prevents monopolistic price appreciations, basically. And then I didn't get your first question. What was the first question?
Yeah, I mean, just as a follow-up to this. So, I mean, in the Western aging cost of the country, I mean, it doesn't stabilize. I mean, even knowing that, I mean, the state can just come in and be a significant or say a monopolistic actor, it doesn't help. Even in the countryside, the land prices have just, I mean, tripled, quadrupled, etc. in just a few years, as we know. Here, probably not the size of the land or the knowledge or mobilizing land, but how actually we are changing the rules. I mean, classification, defining of the land. I mean, which could be just, I mean, left on its own, or you just, I mean, by the stroke of a pen, you just say from tomorrow onwards, this land is now, it could be invested, or it just, reserved for, enterprises for manufacturing or for residential purposes. So perhaps, not the size of the land, but perhaps, changing the rules. Taking us back to, to the legal issues and the legislature, perhaps. So how those rules define the arrangements, and therefore, this monopolistic power might not be having this or that land, but this power and this authority to rewrite the rules by a stroke of a pen, which is the market creation power of the state. So I don't just, own that land and that money or just another sort of capital, but I have this market creation power, both in the energy sector and in the housing market, which is, where publicly owned land is one of the common assets, which is mobilized for market creation.
And yeah, exactly. It acts as a market creator. Exactly. But the thing is, state acting as a market creator is a stabilizing force for the market. That's what I'm saying. I don't argue against you. I agree with you that it acts, all these rules are put in place to just enhance the market. But enhancing the market also gives like some stability to the market. It's just like, it's a very different structure. I know prices have been increasing in some places. I'm not saying the state's existence there is like acting like a benevolent force. I'm not saying it's a benevolent force. I'm just saying it's a stabilizing force, not for the people like necessarily, but for the market itself, for the housing market itself. And it is a very different structure when you compare it to places like the UK, where all land is privately owned, and you have this like very big landowners, which has like significant market power. Whereas in Turkey, you don't have any private actors with significant market power in the land market. So the state is the only actor which has some like market power in the land market. And this is a very stabilizing force for the overall structure of the sector. I'm not saying, like I said, I'm not saying it's benevolent. Obviously, it's, like for the market and so on, but I'm just talking about, like how the markets are functioning, basically.
Okay, so then how do we measure stability in the market?
How do we measure what?
stability in the market. So it's
Stability. Well, I mean, we
intervention
look at
settlement.
price. Yeah, we look at price appreciations. We look at overvaluation. And then we just say if prices are increasing, but not necessarily leading to any crashes, like if you don't observe like lots of firms just like going bankrupt or anything. And then the thing is, the economy has been going through like a crisis, right, since 2018. And even since then, we don't necessarily observe any big crashes in the construction industry. It is a stable market. Like, again, I mean, I'm not saying being a stable market means it's a kind of like a functioning market, right? So kind of like I'm not interested in its like actual doings. I'm just only interested in its place on a kind of macroeconomic level. I mean, how does it relate to the macroeconomy? I mean, like does it fit well with the rest of the sectors, or does it really just create an asset price inflation, like a bubble? It doesn't, I mean, it never, at no time, there was a housing bubble in Turkey. Price increase is not necessarily, I mean, I know in the Turkish literature, people claim price increase, there's a price increase, so this was like a bubble. I don't think a bubble, I mean, not that I don't think, a bubble is not the same as a price increase. It's a different formation, and I don't think we observe that formation in Turkey at all. I mean, this is exactly what I'm trying to say, right? Just because we don't observe a bubble, like people have been trying to just say, there was a bubble in Turkish case, because unless there is no bubble, people cannot really talk about financialization. But what I'm saying, why do we have to just make things up just because we need to make some kind of like macro level arguments? Let the macro level arguments stay at that level. Financialization, right? So this is a kind of like a global phenomenon, macro phenomenon. And then when we need to talk about it, we don't necessarily talk about the housing bubble, right? Because housing bubble is a product of like many individual elements which are happening in individual like sectors all across the board. And like some of these elements are very context specific. I mean, in the Turkish case, there wasn't a bubble formation, not because there wasn't financialization on a macro level, but because there were all these like contextual elements which were unique to the Turkish case. So we didn't necessarily observe a bubble. Am I making myself clear? I think I'm just like repeating myself now, but this was like my, was my aim. Like we don't necessarily look for bubbles to talk about financialization. I think we need to talk about financialization on a different level. And then when we talk about individual housing sectors in individual countries, we need to observe all these individual cases, but incorporating all these like unique contextual elements. I mean, without necessarily saying, I want to talk about, financialization in Turkey. So what should I do? Yeah. Well, I need to talk about housing bubble first. Yeah. I don't think this is the kind of like helping us.
I think you made it very clear, and you repeated your argument.
I'll stop now,
which is what we need, which is what I need. So I think the time, considering the time, so we can next time when we meet, we can still discuss those, financialization, whether, how. So, but the fact is, your book is published and went through the review process, and that means you made a very good, very interesting point, I think, and that is, I think, in the context of the Turkish economy. I think those are the things that we can take home, and thinking more about it. For me, I found it very interesting, and you actually stimulated many more questions. So given that, Karen, are you okay? I didn't thank you, but thank you, Karen, for your question and comments. I did not see any other hands, so I would say we can. I would thank everybody for your time here, for your contribution, and thank you, Ezgi, for your very strong argument and clear argument, and you made it very, very clear. So. Ezgi, do you have maybe one sentence to say, or or I can. Do you have anything to say, Ezgi?
Yeah, I mean, thank you all for very helpful questions. Yeah, it also, like made me think more. So thank you for inviting me. Yeah, I mean, like I said, this is like a part of like the book. Obviously, the book has like big space to discuss all these like big methodological questions and big kind of like theoretical questions. So it's not really, like I said, it's not really about like housing financialization per se. It's really about this like methodological exploration. Yeah, so if you're interested, in these questions further, then yeah, the book is like there, and then the paper is going to be published soon as well. Yeah, so and I'm happy to discuss, if people have like other questions later as well.
Yeah, very interesting. So actually, I'm looking forward to the next the research outcome from you, and that is about the textile sector in Turkey, and why? What are the differences? So, what are you going to argue about this sector? So, but thank you very much. I think we should close this session as we normally do, and if there are no more questions, I hope everybody can take something home, and I will see you after the break, after the week after next week. We will start again. Okay, thank you very much, and take care of yourself. Bye.
Thank you.
Bye bye.